Hello, hello, hello.
Good
Good
evening.
Good evening.
evening, everybody. How is everybody today?
Doing well, thank
Fine.
you.
Hey,
Thank
wonderful,
you.
wonderful. All right, well, I hope you're ready to do a little battle some more with this doggone accounting governance thing. But first of all, let me see who's with us today before we go any further. By the way, I know you haven't received your grades yet, but I have them, and you guys did pretty well. I'm very impressed. Okay. All I need to do now is sit down and send them to you individually, email by email. But you guys did very well. Nobody got under 60%, and somebody got as high as 94%. So, and some great stuff in between. So you guys have done pretty well. I'm looking forward to similar stuff in your final exam as well. Okay, Indira, by the way, which week are we in today? Anybody knows?
I think 9.
9 already? Okay, some,
What was midterm? 6 or 7?
well, the semester is supposed to be what?
It's 12. I think it's 12 weeks.
Is it 12 weeks?
So then we'll be in week 8.
Is it 12 or 10?
I think it's 12.
Anybody else has any ideas?
I thought it was 10, but then I don't know.
I think it's 12 weeks.
My. It's interesting because we still
I think
wait.
this class is 10.
Yeah, we're still wavering between 10 and 12, but I think it's 10. However, I will definitely confirm that in short order. I think one or two persons are thinking 12, but I do believe it's a 10-week schedule. So today we are now in week number. Anybody knows where you are?
It's week 6.
I think we have 12 weeks because the midterm is at week 6, which is February 22nd.
No, that was week 5.
It was week 5, actually.
February 22nd?
Yes. The midterm was
Okay.
week 5, which means that the second half of the semester started in week 6, which was,
But we started on January 18th.
was it January the 18th?
Yeah.
Are you sure?
Yep.
I'm waiting for your colleagues to kick in. Because according to my schedule, last week represented week number 7, 2 weeks after your midterm.
That was a week after the midterm.
Just a week?
Yeah. This week makes 2
Yeah.
weeks.
This week makes 2 weeks after midterm.
Yeah.
Okay. So
So I
midterm,
think this is week 7.
1, 2, 3, 4.
I think it's week 8.
Who said 8?
Me,
Who is me?
Makita,
Oh, Makita, I think you're right. Why do you say 8?
because we started January 18th. When we started off, you said the midterm would be 40% of the grade on week 6, which would be February 22nd. And that same class I recorded at 40% for the final and 10% for participation and attendance and 10% for assignment.
It's interesting you should say that, Makita, because according to my record, that is correct. But your colleagues have another record. That's interesting. All right, let's see. Yeah, according to my records, we finished week number 7 last week. So today represents week number 8, which means that you have 2 more sessions left, which is today and next week, and then you'll be doing your final, just like that. Unless somebody changed it from 10 to 12 weeks and didn't tell me. Okay, so make a note. We are now in week number 8. And so that means you have one more exam coming up in a couple of weeks on the literal financial side of things. And I hope you guys do as well in your final as you did in this exam. I was quite impressed by the effort that everybody made. Okay,
So when would be the date for the final?
well, today is week number 8. Next week is week number 9, and the week after that, what is the week after next week?
The 22nd?
There you go. Okay, March 22nd. All right, so please make a note of that. Man, how time flies. All right, so after we're done tonight, I'll sit down somewhere between after class and bedtime, whenever that is, and send your grades to you individually so you can see them and rest easy and start getting ready for the other stuff that's coming up. Any questions before we go on? All right,
When do we get our results back for the midterm?
tonight, as soon as this class is done.
Okay,
Okay.
all right,
Uh,
thank you.
Yeah, because I need to send it to you individually, so I have to send it, pull out your email and send it one by one. I can't send it obviously as a group. So I'll do that after class. Okay, Paulette, not bad.
Yeah?
No, not bad. Makita, not bad.
Oh,
Like my grandmother would say, mostly, and even those 1 or 2 persons who still okay.
You could have just pressed send. I mean, one time, is it calling off people's names?
Oh no, I didn't call the grade.
I know what you're saying, press send.
Oh no, I'm not looking at it from the computer.
Oh, okay, all right.
I'm looking at my grade sheet.
Okay, all right.
Yeah. So I get somebody's got 90 something, bunch of people got 80 something, 70 something. Man, interesting. All right. So as soon as we're done and I lose my tie, I will be sending this stuff out to you guys. All right. So let me do my register first, and then we can get back into this crazy accounting thing. All right, Indira, are you there?
I'm here.
Okay, Indira, got your message. What else? Makita, I heard Makita. Are you
Yes,
still
I'm
with
here.
us, Makita?
Yes, I'm here.
Can't believe we're in week number 8 already. My God. Okay, Maria.
I'm here.
Okay, there we go. Let's see what Maria did. Maria. Oh, darn it. Okay.
You really shouldn't do that.
I know it
Should
stinks.
you just tell me the grade?
Yeah, I know it stinks. Yeah, the anticipation is killing me for you people. I know it's crazy. Paulette, are you still there?
no, yes, I'm still here.
Wonderful, wonderful. Okay, who else? Hmm. Who else is on? Charles, are you there? Charles must be having a martini. Okay, Charles is not here. Hope he joins us soon. Kia, are you there?
I'm here.
Excellent. Laura, are you there?
I am. Good evening.
Good evening. Wonderful. And who is this? Ronaldo, are you there?
Present.
Okay, wonderful.
Good night.
Good night. Good
Good
night.
night.
Welcome aboard to Trace. So Dequiza, did you speak with Miguel about the blah blah blah?
Good evening. Yes, I did.
Okay, great. Wonderful. I just want to make sure you did.
All right. Thank
I'll
you.
get back to you offline.
Okay, not a problem.
Okay, or vice versa. See how that goes.
Okay.
If there are no questions before we go on, then let's just get right into this crazy stuff. Let me see if I can share this thing with you again. Do you guys remember that from last week?
Yes.
Yes, I would hope so.
Sorry, I do have a question, actually.
I was hoping somebody would say that. Let it rip.
My question is, since our final is on the 22nd, which means we have one more class left,
Right.
the next class will be covering a new topic as well, correct?
The second set of slides that you have.
Okay, so then the final will just be on the 2 slides?
Absolutely.
Okay.
Unless I think of something else between now and next week.
No, you don't have to do that. That's okay.
I don't
All right.
think- Okay.
That's generous, but it's not needed.
Not needed.
Yeah, man, why you have to go say that, man?
I'm serious.
Funny. All right. So anybody has any question about these basic accounting transactions? I pulled out these three because they tend to be typical transactions that get people stuck from time to time. Again, remember, you're not here to learn how to be accountants and bookkeepers. You're just here to listen and take a brief walk through the lingo. So if any governance issues come up with regards to financial reporting, when this discussion comes up, you will not be totally in the dark. Okay, that's really the whole idea. All right, so if there are no questions about these transactions, let's move on then to some additional interesting stuff. All right, double entry bookkeeping. What is that again? Anybody remembers? What is it? What is double entry bookkeeping and accounting? Did we talk about that?
That's when you have to debit one side and credit the next.
Absolutely. Okay. Double entry bookkeeping is based on transactions that have equal and opposite sides. For every debit, there must be a credit. For every credit, there must be a debit. All right. And these transactions in practice affect at least two different accounts at all times. Please, if I ask you that in a test, don't get that one wrong. Okay. is very fundamental in the accounting process. As a matter of fact, a lot of fraudulent and errors and governance issues arise because some organizations have very poor bookkeeping practices for one reason or another. Either the people are not properly trained and prone to errors, or the management is telling people in the accounting department to make transactions that don't even exist. Okay? And then the auditors come in and discover it and find out that they were playing around with the books. And so this is why all of these concepts and these little discussions are so important to the governance process. Okay? Does anybody remember what the accounting equation is?
Assets equals liabilities plus owner's equity.
Absolutely. Okay. Another nice test question. So please commit that to memory. Just a hint. And of course, remember, based on this equation, it affects all transactions in accounting where these three elements are concerned. Remember also that assets represent everything a company owns, liabilities represent everything a company owes, and equity represents the investment either of the owner or owners of the company, shareholders. Okay? And based on this equation, everything that's on the right-hand side of this equation must be equal to everything that's on the left-hand side. So if I were to tell you that liabilities in this company were $5,000 and equity was $3,000, what would be the value of assets in this company?
Can you repeat your question, please?
The liabilities are 10,000, the
Mhm.
equity is 3,000. Based on this equation, what would
Mhm.
be the value of the assets of this company?
13,000.
Absolutely. Okay? The equation never changes. It is consistent until the end of the world. All right? Another example, if you have assets of $10 billion and you have liabilities of $3 billion, what would be the value of equity in this company?
You
Say
said
that- those numbers again?
Your assets are 10 billion,
Uh-huh.
your liabilities are 3 billion. What is your
Uh-huh.
equity?
7 billion.
$7 billion. All right. And once you understand that, you could practically pick up any balance sheet and look at it, and you'll see what I mean very shortly, and say, I have an idea what's going on in this company. Also, if you pick up a balance sheet and the assets do not equal the liabilities plus equity, something is very, very wrong with those financial statements. Okay. And so you can actually be very effective even with just these fundamentals if once you understand how they work. All right. So somewhere between the double entry system and the accounting equation, the organization ought to maintain proper governance by making sure that these things are done correctly. Okay? Of course, people make errors, but people also do things on purpose. That's why we have external auditors who come in to see what is an error versus what's done wrong on purpose. But you may be surprised to find that auditors are not necessarily coming to look for errors. Errors tend to crop up, and fraud and all that kind of stuff tend to crop up during the audit of financial statements. What auditors really come in to do is to check the accounting equation that we just did, to check the revenue and expenses, to see if they're correct, because if they're correct, then profit is correct, and stuff like this. So basically, auditors are coming in to see whether or not the company is using generally accepted accounting principles in order to do its financial work. If they are doing that successfully, then they have a successful audit. If they're not doing that successfully, then they will have an unsuccessful audit. Okay? Some audits are so bad, the company is operating so poorly, some auditors at the end of the audit indicate in their report that they cannot give an opinion because there are too many problems. They've asked for files and files are missing. They've asked for information and nobody wants to give it, and so on. So if the auditor cannot get all the information that they need, then they cannot conduct an effective audit in accordance with audit principles and accounting principles, and therefore your company will not get a successful audit. Okay? Of course, in some cases, auditors might find a few issues and say, we will not issue a report until you correct those issues because they represent governance and financial problems. Fix them, and then we'll give you a clean bill of health. So again, it depends on what's going on in a particular organization, and knowing a little bit about these little bits and pieces is always helpful when the discussion comes up, as opposed to not ever being introduced to it at all. Okay? So just keep that in mind as you go forward. A little bit more about double entry notice. Just for information, we are told that when we refer to the term debit, this is an accounting entry that either increases an asset or increases an expense account or decreases a liability or decreases an equity account. Uh, does that mean that non-accountants need to go around with this and dream and have a nightmare? Of course not. Okay, it's just an extension to the double entry process, so you have a little more information on how it works and why it is so important. All right. So whenever you hear the term debit in accounting, that means that an asset is being increased. So we debit cash, that means cash is going up. We debit equipment, that means we bought more equipment. Assets are increasing. Also, when we hear debit, we also know that expenses are increasing. So if you get a light bill from BPL for 300, you debit electricity expense. Then the next month you get one for 500, you debit electricity expense again. So your electricity expense account keeps growing because of that debit. And these are just fundamental rules that never change. Okay? So a debit increases your assets and your expenses. But on the other hand, what does a debit do? It decreases your liability, okay, and your equity. In other words, if you have an accounts payable or a loan payable for $50,000, that's a credit balance. When you pay off the loan, you have to debit the loan to bring it to zero. So debits decrease your liability. Okay. So it's just a little rule in accounting that you might want to know just to enhance your bookkeeping skills. Okay. On the other hand, credits do the opposite. Okay. Credits increase the liability or equity and decreases the asset or expense. So it's really just the opposite side of the debit side. In essence, we see all this just to augment the point that for every debit, there must be a corresponding credit, period. Okay. Anybody has any question on that? Like, does any of that seem a little weird to you? Okay. If it gets weird later, you can raise a question. All right. So a couple more entries then. The entries you saw earlier didn't have any numbers in them. They just said what was increased and what was decreased. I pulled out a few entries here just to show you how it looks in the real world in terms of the presentation and the numbers and the debit column and the credit column. And the reason for this is that if you're moving around your organization, even though you may not be the accounting person, if something comes up and you see a document, you look at it and say, I remember that. That looks familiar. I actually remember something about what we talked about, and I can say something about this. Okay? All right. So the big question is, since the double entry system must prevail at all times, fundamental, it's like the foundation of a building, and since the accounting equation must always be equal, never changes, then we can move to the issue of the general journal. Now, the general journal is really just this document. It can be manual or electronic, doesn't change what it is and what it looks like. Right? But really, the general journal is basically used to record day-to-day transactions. It's really that simple. And how do we record day-to-day transactions? Well, we simply analyze them. We debit one account, we credit another account, and that's it. The big challenge is though, what do we debit and what do we credit? Okay. Notice the journal has some other features as well. We have a date column, we have a description column, we have a debit and a credit column. Now this is going to get interesting because notice first of all that all transactions in accounting are recorded in chronological order. So if you walk in your accounting department and pick up a journal and you see the dates scattered around, you don't have to be accountant anymore to know that something is wrong. You can easily ask the question, why are the dates scattered on this journal? They should be in chronological order. And if they don't fix it, then you can report them. And then they're going to hate you after. So what can I say? Okay. So the first important thing is every accounting transaction, not only must it be a debit and credit, but when it's going into the journal, it must be dated. It must be dated in chronological order. Okay. All right. So let me just be the devil's advocate and see what comes out from this question. Can anybody tell me what the first journal entry represents?
A loan,
Yeah, it represents a loan. How do you know?
notes payable,
Notes payable. Okay.
and then cash. So you received cash.
Yes,
Note payable. That means you have to pay that back. And of
absolutely.
course, underneath it says borrowed 50,000.
Absolutely. And that's the beauty of accounting. If it's done properly, you do not have to be an expert to understand a lot of the transactions. There are a lot that you need to be an expert to understand, but there are a lot you do not need to be an expert, especially if you use the right language. Okay? Like debit cash, credit notes payable, and then put a narrative underneath as an audit trail so that anybody looking at the transaction knows what it's about. The company borrowed $50,000, which it has to pay back. It's as simple as that. Now, they're not all as simple as that, but it does give you an insight into what is supposed to be happening on the ground. All right? A couple of things on the ground in accounting. First of all, the accounting equation must always balance. So if you pick up a balance sheet and it doesn't balance, the assets do not equal liabilities plus equity, you have a problem. Secondly, for every debit, there must be a credit. If you see a transaction on only one side and not the other, then you have a problem. If you see a double entry, but the amounts in the double entry are different, you have a problem. So right off the top, and then now you have the journal entry where transactions are recorded, and if the information is recorded correctly in the journal, you can almost tell in many instances what the transaction represents. Okay? So the company borrowed $50,000 in cash, and because it was borrowed, it had to create three debit cash because we're receiving it as an asset. And remember what debits do to assets? They increase assets. What else does debits do? What else does debits increase? Anyone remembers from the previous page?
Expense.
Yeah, it increases expenses. What do debits do to liabilities?
Increases.
It decreases liabilities. And what do debits do to equity or investments?
Decrease it as well.
They decrease them. Okay, so it's not difficult. And credits have the opposite effect. Once you know one side, you obviously and clearly should know the other side. Okay. All right, let's look at the next transaction then. Can somebody say what that transaction represents?
That represent. Well, this
It's
is
a capital hit, that's a capital purchase. No, equipment.
Well, you can say it's a capital purchase. What is the capital purchase here?
It's an asset, a fixed asset,
Yeah, what did the company purchase?
a vehicle.
Maybe, or certainly a piece of equipment.
Oh,
Yeah,
equipment, sorry, that was the second one. I apologize.
yeah. So for some companies, the equipment is a vehicle, even though if it's a vehicle, they should say it's a vehicle. In this case, they've separated the vehicle from the equipment, so probably this is a piece of equipment to produce something
All
in the
right.
company. Okay. Do we have any companies in the Bahamas that purchase equipment to produce something?
Penny?
Bahamas hot mix,
Yeah, what equipment do they purchase?
the brick makers, the equipment
Yeah,
to make bricks.
absolutely. Any other companies produce equipment to make stuff?
You mean produce equipment or purchase equipment?
Purchase, sorry, equipment to make stuff.
Restaurants,
What do they purchase?
like stove, fridge, cutlery.
Yes, 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 and yes. Absolutely. Okay. So in this case, the company purchased equipment. Did they borrow the money for the equipment?
Um, no.
How do you know?
No, it doesn't say so.
It
It
doesn't
doesn't
make
First of all,
indicate it.
they got
yeah,
the
first,
brand
first
that
of
they
all, first of all, it doesn't say so. Somebody, no, it doesn't say so. Which is,
It doesn't say so.
no, you're right. This is why in accounting there should always be a narrative. You follow? If
Yeah.
you pick up, if you
Mhm.
go into your accounting department tomorrow, pick up the journal and there's no narrative telling you what the entry represents, they are not fulfilling the full requirements of GAAP, because the narrative tells you right off the top what the transaction represents. And even for a layperson in the organization, a member of the board, somebody from marketing, somebody from legal should be able to pick that up and say, okay, we purchase equipment for that particular amount of money. That's the beauty of accounting. It's not supposed to leave things hanging. The transaction is supposed to be clear. That's why anytime I walk in an accounts department to do a review, an audit, or something of that kind, uh, and I don't see that right off the top, I'm like, not that the transaction is wrong, it's just that it's incomplete without the narrative. Okay. All right. So the money wasn't borrowed. How did we pay for the equipment?
Cash.
Of course. Remember when we borrowed the note for $50,000, we debited cash because we received money, but now we purchased the equipment for how much?
But
30.
30,000. So we have to credit cash. Does everybody see that?
yeah.
When cash is coming in, we debit it. When cash is going out, we credit it. Simple as that. Where do you think this company got the money from to pay cash?
The money,
The loan,
Which loan?
the
50,000.
Yeah, the 50,000, of course. That's exactly why companies borrow, to buy equipment and other assets. What you don't borrow for is for non-performing stuff. Like you borrow 50,000 and go to on a European tour.
ha.
And then of course the old piece of equipment break down while you're on tour, and then all hell breaks loose. See, you don't do that. You borrow the 50,000 for a particular purpose, and obviously in this case it's to purchase equipment. All right. Now it gets interesting. What about, and notice the chronological order of the transaction. The first is recorded before the third, which is recorded before the sixth. That's how accountants are supposed to think, in an orderly fashion. All right. So what happened on the 6th of August?
It's a vehicle.
Vehicle,
We purchased another vehicle,
Yeah.
or we purchased a vehicle?
a
What
vehicle,
type, what type of vehicle?
delivery truck,
How do you know?
because that's what it says.
Absolutely. That's why anything you're looking at and there's no audit trail could easily be considered a suspicious transaction. Not that it is, but it might be. All right. So recording these details are important to the accounting process, for sure. Sounds like somebody's taking a bath. Is somebody taking a bath in the middle of my lecture? I mean, that would be fine if only you would admit it.
The beauty of virtual classes.
Absolutely. You can actually take a bath in the middle. Ah, what can I say? That's fabulous. Okay, so on August the 6th, we purchased a delivery truck. For, how much is the truck?
20,000.
Okay, did we pay cash for that too?
A little bit.
Yes.
Partial cash and borrowed the rest.
Yeah, what do you think the partial cash represents in this transaction?
The down payment.
That was the balance from the
Yeah,
50.
yeah, somebody said it. The?
Balance from the 50.
No.
It's the down.
Oh, you mean the partial cash? The 2,000. Oh wait,
2,000 represent
the
a
2,000.
10% down payment.
Yeah, it's a down payment. How do you know it's 10%?
The 20,000 is the total cost.
Yeah.
2,000 is 10% of 20,000.
10,000.
Absolutely, absolutely. All right, so you guys are on the roll. By the way, you need a calculator for the rest of this class tonight and next week, and definitely for your final exam. All right. So yeah, great stuff. So if 2,000 was paid in cash, how did we get the vehicle?
Borrowed money for the rest.
How much?
18.
13.
Okay, okay. So how much does this company owe in total now?
The 50 plus the 18.
18.
68,000.
How much?
68,000.
Absolutely. So this company has some heavy debt already, but it also has some heavy assets, important assets that they got out of this thing. Because now they have the equipment to make what they're going to sell, and they have a delivery truck to deliver what they're going to make. And that's how you do business. And that's why you use the money for the intended purpose. You don't borrow money and then run off and do some other nonsense. That's poor governance, which many people still do for some strange reason. Okay? That is why these things fall under governance. Because a lot of governance problems are not in the boardroom, they are in the accounting room, the finance room, that part of the organization. All too often. All right. So now that we've seen how a transaction is recorded, we can take a swipe now at how it's posted. Okay. And generally, all transactions after they're recorded in the journal are then posted in the ledger. What is a ledger?
It keeps a record. It's a record that keeps all accounting transactions by accounts.
Yeah, it's a record that keeps all accounting transactions by their respective accounting names or classifications. Okay, and we'll see that very shortly. It is also referred to as a unit for recording and summarizing accounting transactions, better known as T accounts. And this question,
No, go ahead.
and we'll see the T accounts in just a moment. For now, the ledger is really where we keep all of our accounting stuff. So let's see how that works. There you go. Why do you think we call it a T account?
Because it looks
Shaped
like
like a T.
Yeah, it looks like a T. All right. And this is the account where accountants and bookkeepers do all of their analysis and post all the transactions to see what's going on a daily basis. That's how accountants are able to keep thousands and thousands and millions of transactions in order on a day-to-day basis, because we understand how to take a source document, analyze the transaction, put it in a journal that we just saw, a general journal, and then post it to the ledger account called T accounts. That's how we do it. And that's why we can maintain order with no matter how many and what types of transactions.
hold on. Hold on a second. Sorry, I'm not talking to you. I'm talking to my cat because she decided she want play. Sorry.
Maybe you should introduce her to some of these debits.
Serious man. Come look at this debit. This debit and credit here.
Yeah, maybe that'll keep her busy. Speaking about kitties,
Mhm.
for some strange reason, my oldest son in New York, about 3 months ago, he bought this kitty that he says is a pedigree cat from somewhere. And she's this white cat with this big fluffy tail and rolled over ears and all this crazy stuff. And he's just so happy with this cat. And every time he calls me, he wants to show me Winter rolled up in the corner, Winter or sleeping on his head. Winter, I'm like, dude, do I look like I have nothing to do? So I get it. Okay.
Yes.
Completely. All right. Besides, uh, I'd probably have a cat too if I had the time, but the problem with animals, they get attached to you and then you have to plan your life around them again like children, and then you become attached to them and then you get sick and then you stop. All right.
Hold on a
So
second.
this T account, then what's the name or classification of this account?
Cash.
Yeah, this is a cash account. And remember, what goes to the left-hand side of the cash account?
The debit.
All the debits. And the right side?
Credits.
Credits. And notice, once we know that rule, we don't have to write debits to the left. We don't have to write credits to the left. Debits to the left and credits to the right. We know where they are. That's the beauty of it once you learn the rules. Okay? So, how many debits went through on this cash account?
4.
4,
All right. And how many credits?
7.
7,
7. And therefore, at the end of the period, day, week, month, whatever it is, what was the total sitting in the cash account?
37, 5, no,
37,500 was deposited, yes. And how much was paid out?
subtract 47. So you subtract the 47 from the 37.5?
To give us what?
100.
47,
Well, if we subtract 4,700 from 37.5, whatever's left gives
What do-
us tells us what?
That's the balance.
Of which account?
I calculate.
Cash.
Debit or credit?
Debit.
How do you know?
Debit,
Because you minus in what was taken out of the account, which is on the right hand side.
So, but why don't we put the difference on the right hand side? Why do we put it to the left on the cash and the debits?
Is it still in your possession?
no,
Because we needed to balance back.
To what?
To the 37,500.
So the 37,500 amount we start off with.
Doggone it, that's the way the Brits do it. The Americans don't do it that way. Here, yeah, you're right. Here's what the Brits do. They'll take the 37.5 debits and subtract the 4,700, and whatever's left, they will add it to the right side so that it's equal to the left side in terms of balancing out the account. But even though they do that, the actual balance of the account is really a debit of how much?
32,800.
Why is it a debit and not a credit?
Because that's the asset that you have left in for cash.
Okay, getting warm. But let
You
me just,
used 4,700 out of what you started off with.
and therefore,
So you have to show how you use it, which was the 47 with each transaction now.
and then,
And
And that is minus from your start.
correct. But the question is, why do we, the difference of 32 some, whatever 32 something, why is it on the debit side and not on the credit side?
Because that is what is left in your possession.
that's your position.
Yeah,
Because
because
they paid it back into when you move from the debit to the credit, isn't that you inject it back into the company? That's why we get back to the debit.
no, that's an interesting point though, but that's not actually what we do. What happens is the larger side of this account is a debit balance, correct?
yeah,
The smaller side of this account is a credit balance.
yes.
So that means we spend less than what we have in the account, correct?
Yes.
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 Yeah, and whenever we spend less than what we have in the account, we go with the debit or the balance would be on the larger side of the account. Does that make sense?
Yes.
So you're minusing the 32,800 from the 37?
Oh, no, no, no. We're subtracting everything we spent, which is how much?
4,700.
From everything that we put into the account. So we take away everything we spent,
Mm-hmm.
everything we put into the account, and we left with,
3,200.
yeah, a debit of 32,000, whatever that works out to be. Because that's what you have left in your cash account. Do you follow?
So
Yeah.
in this account, you'll just put that under the total?
You put it under the debit side. Yes,
Mm-hmm.
absolutely.
30. You're left with 32,800.
Yeah, and that's what you bring down, just like in your checkbook.
Fast
You bring
forward.
it down as your new balance, or yeah, bring it forward as your new balance. In accounting, we bring it down. Okay, that's all that's happening here. All right. So, with that in mind, remember that account that we looked at was a cash ledger account, but that was only one ledger. In accounting, we create a ledger account for every single type of account that we could think of. Tens, hundred thousands, millions if necessary. And each one of them is called a ledger account. And then we put them all together. You guys might know this expression. They then become a general ledger. Remember that?
Mm-hmm.
So when you hear the term general ledger in your office, it means that they're talking about all of the individual accounts together. So if you go in tomorrow and you hear somebody in the accounts department say, man, this this flicking ledger out of balance again. Now you know what happened. That means of all these accounts that I'm showing you, something went wrong on one or two or three or four of them, or whatever the case might be, and therefore they do not balance. So the ledger, the general ledger, is out of balance because one or more of those accounts are incorrect. Somebody didn't record that debit and credit correctly in the journal, or somebody recorded correctly in the journal but didn't post it correctly to the T account or the ledger account. And whenever that happens, you will come up with errors, pain, and suffering. All right. That's why in accounting, your people need to be meticulous, well trained, and careful in their work. And they need to be encouraged to say, if they're not sure what a transaction should be, seek advice rather than do the wrong thing, rather than journalize it incorrectly. And then once it's journalized incorrectly, it's then posted incorrectly. Once it's posted incorrectly, then it goes into general ledger incorrectly. Once it bloody goes into general ledger incorrectly, goes into the financial statements incorrectly. And then depending on the amount involved, it becomes a big old mess that auditors may or may not pick up. That's the other problem. But that's another problem. Right? I just want you guys to see as governance students the kinds of issues that are out there, uh, and that it's not only in the boardroom around the table talking about INEDs and all that. Okay? It's it involves a whole lot of other things. All right. All right. So if each of these items represents a ledger account, and together they become the general ledger. How many ledger accounts are in this general ledger? Anyone?
14?
You can, who the heck counts that fast?
Mm-hmm.
Okay, is it really 14? Or you just made that up.
It's 14.
Yeah, it is.
He's good.
Amazing.
He's that good.
Oh, gone it. It wasn't out of my mouth. She said 14. I'm like, what the hell? Okay, way to go. All right. So yeah, there are 14 ledger accounts in this general ledger. Um, Is there a dividends payable account in the general ledger?
To the
Yeah.
bottom.
Yeah,
Yeah, what's the balance?
3,000 credit.
Yeah. What do you think dividends payable means?
Dividends that are that uh you can, it's there to be paid, but it hasn't been paid yet.
Correct. Payable in accounting always means it's there to be paid, but it isn't paid yet. It is due, but not yet paid. Okay? They will pay it soon, God forbid. All
Wait,
right?
why? Why, God forbid?
Because sometimes the payable sits longer than it should. They put it there, but they don't pay the dividends,
Ah,
just like any other debt. Remember, dividends are normally paid to whom?
shareholders.
Of course. And if they run out of money or they decide they need money for something else right away, then they put the shareholders on hold. They'll put the transaction through as an expense, dividends expense, debit, and then dividends payable. Okay. But then they wouldn't pay until they're ready to pay, just like any other debt. Remember?
Mm-hmm.
Absolutely. So when people owe you money and they call you, they say, man, um, I have a to pay, but I can't pay yet. Call me next week. So they get to keep your money another week and you get to not have it another week. That's the
Mm,
problem when people owe you. Okay. So
true,
unless you have money to burn as a company or an individual, be careful how you lend.
true.
All right. Because sometimes people make a living of not paying other people what they owe.
My Lord.
How about that? Because every week they get paid and they're supposed to pay you and they don't pay you, that's cash flow for them and none for you.
Wow.
It's kind of deep when you think about it that way from
Guilty.
an accounting perspective.
Mm-hmm.
All right. So just make sure you lend to people who you feel will pay you back. And even then, sometimes they surprise you by not paying you. And then when you try to get it, they get uptight with you, so they're not calling you anymore. And if they see you in the road, they roll over on you. And if you're sick, they wouldn't help you because you keep calling them for your own money that they borrow from
God,
you.
God, please.
Okay.
You sound
Uh,
passionate.
sorry,
What are you passionate there?
me?
Mhm.
Definitely. If people paid me 50% of the money they owed me from 1990, I'd be rolling over in money.
Wow.
I'd be able to go to Waikiki 17 times. That's why I know. Been there, done that. Still there. People are still promising. I swear next week. God knows it next month.
Well, you know what you do. As a financial advisor, what I advise people to do is either have them give you something that's valuable to them and valuable to you to hold on till they pay you.
That's true. And that works with some people, but not everybody.
All right.
That's, yeah, you're absolutely right. But the problem with customers, they're so diverse. And this diversity thing. Yeah, they're so diverse. That even customers are diverse. All right. And yeah, some will do that and some will honor their commitment and others. You could shoot their parents and children in front of them and they're still promising
Mm-hmm.
some strange reason. All right. Any revenue accounts in this general ledger?
Accounts receivable. Oh, sorry,
Mm.
service revenue.
Yeah, service revenue. Ah, how much is the service revenue?
24,000.
24,000. Did you get paid for the service you provided? Did you get the 24,000?
No.
Well, I mean, you'd have to do some checking to find out. Because if you provide services of $24,000, you either got cash paid for the service or you got a promise, correct?
Yeah.
And when you get cash, you're happy. When you get a promise, you get an accounts receivable, correct?
Yeah.
Does this general ledger have an accounts receivable?
Yes.
Oh, what's the balance in accounts receivable?
4,000. So you only got paid 4,000. Is that a debit?
That means you only got 20,000 of the 24 that is
Yeah,
owed.
yeah, you got 20,000 so far out of the 24. Now, when did you provide the service? When?
On the 30th.
Of which month?
Um, November.
Hmm.
on the 21st.
Yeah.
How do you know it's the 21st?
Because that's when accounts receivables was debited.
My. So even though the date is not in the service ledger, and it should be there, okay? You can count, you can still go back once you understand the relationship, see? What did she do? She said, I don't see it in the service revenue account, so I'll just go to that bloody accounts receivable where they didn't pay. So yes, the service was provided on the 21st of November. When did you get your first payment?
On the 29th.
The 29th, and you still didn't get all of it, correct?
Right.
They still owe
Correct.
you?
Yes.
They still owe you $4,000. Okay? So there you have it, these relationships. By the way, do you have a cash account in this general ledger?
Yes.
Yes.
Okay, what's the balance in your cash account?
401,570.
17.
Okay. Did we pay anything out of this account during the month?
Yes.
Yes.
How much did we pay out?
18,530.
Okay. And if we subtract that from the total that we took in cash, we should have a balance of 401,570. I told you it's almost like a ballet dance. It's a work of art. Once you understand the rules, you learn them, you apply them, and they never change. Accounting is consistent. Once we start doing things a certain way, it's called a consistency principle. Accountants do not change anything unless something drastic happens. And then whoever wants to change it has to come up with a big time, good business reason. Otherwise, it will not happen. Okay? That's what makes accounting so stable if we're doing it right. It's not like economics. Today you're in a bad mood, so you say one thing. Tomorrow you vote for Biden, so you say something else. The next day you vote for my minister, you say something else. Accounting is not like that. Okay. Having said all of those things now, and turned you guys into little budding bookkeepers and accountants, um, reading journal entry transactions and looking at how transactions are posted to ledger accounts in this funny name, this funny thing called the general ledger. Um, Anything you want, any questions about this general ledger that you'd like to raise that still bothers you? No? Okay, wonderful. If that is the case, then it means we can go on to the next interesting thing, which is the, not what I had in mind, we get there soon. But stick a pin on that general ledger for the moment, let that simmer, and let's take a moment to talk about the uses of financial information. Who's looking to use this information that we're trying to make sure it's so correct and in order? All right. Who are some of the users? Who's waiting to use this information and rely on you to make sure it's correct?
Investors.
Those
Definitely investors. People who want to put money in your company because they want dividends. But they're not just going to put money in your company because you say so. They need to be satisfied that your financial statements and your financial information is correct and generally conforms to generally accepted accounting principles. And if they have any doubt, they'll ask you to have an audit done just to be sure. Because a lot of CEOs and CFOs, they are liars, just like politicians.
Jesus.
Sorry. That's not you, Paulette.
Okay.
Definitely not you.
That's a good disclaimer.
Okay?
Thank you.
I'm talking about the real commercial liars, not Paulette. Okay? Because she's out there trying to be ethical and do things right, and she's gonna get licked in the head with a conch shell for that too. But that's okay.
I don't get. I get in the look in my head with the conch shells already.
I'm not surprised, and it's not over.
over.
Okay?
No,
Whenever you stand for something, you will always get flack. Always.
I mean, I blink. I gotta. I hope you don't mind me sharing the story, but
I don't mind.
I so many thanks to this course because now I'm able to sit in the boardroom with my staff and the principal who's now on the island and say, good corporate governance, you cannot make that decision, sir. You cannot sign off on
Absolutely.
that decision. I have to sign
Absolutely.
off on that decision. You
That's
cannot sign off on that your consultant cannot sign off on that decision, sir, because
no,
he's not on the board of directors.
and it's not acceptable.
It
And
is
that's the beauty of information and education. It is a two-step process. First, you get it. And then secondly, you decide if you're going to use it for the right reason or the
wrong reason.
wrong reasons. That part of it is not in our textbook, nor can I teach you that. I can only tell you to do the right thing. The final choice, though, no matter how much bloody governance you do, is still up to you.
Yeah.
But the important thing is to know what the requirements are. And that's why you get information education. That's the beauty of it. And I tell you, and Paulette is only one of the persons who she hasn't seen all the benefits of these last few weeks and in the entirety yet. There will be more benefits coming up as you move forward in what you do. And so will it happen with the rest of you. And you're
Yeah.
like, damn, he was right. What decision am I going to make now?
Yeah.
Okay? Okay? And
And
so on. So don't be surprised. All
so
right.
yeah,
Yes.
so I blinked once and I understood that they had my team and one of the consultants met with a third party money service provider.
My
And
God.
all
Those
of
people.
all of a sudden we heard I heard through the grapevine from my employees that oh they looking to do money banking service. They say, nope, tell them they can't do that.
Good idea.
Tell them they need to get central bank approval, and that process is a vigorous one, vigorous and rigorous.
Oh,
So
yes.
if they and then we got fined from the SCB because we didn't put in one of our filings, and now all of a sudden now my investors like, oh no, we gotta stay in, we gotta obey all the laws and the rules. Same one who said, oh we ain't gonna break the laws, we just gonna bend them.
Bend
Oh,
a little bit.
but when he get that little fine, it was $3,000. When he get that little fine, all of a sudden, oh no, we ain't gonna break no law. Oh no, we gotta do. I said,
Huh?
excellent. Fine
Uh,
us again. Fine us again, SCB, so that he could understand that y'all we don't play in the Bahamas here.
well, let me put it this way. The two things I like about that. One, that the SCB actually bloody flicking fine one of them to begin with.
They sure
That's
did.
the first thing. And I know that sounds a little strange coming from a former private banker, but there are two sides
No,
to
they were doing foolishness.
the story. Okay? And you have to be in the environment and oftentimes at a very senior level to understand what's really going on. And they're a little arrogant and contemptible. That's another story. Paulette knows that story.
Yeah,
But so that was a nice thing that they
very nice.
finally
I
find
I
someone.
thank the Securities Commission for that because they was
Absolutely.
giving me hell the whole months we was getting things up and running, trying to get things up and running.
Listen, I know them long time. Damn people in private banking is mine. Trust me.
Man,
I know. Been there, done that at all levels. Okay? All right. Now, the other thing I like about that is it actually jolted him into trying to decide that he'll do it right.
exactly.
Because there are some of them, no matter how much you find them, they're still looking for ways to do it wrong. How about that? So, those of you who might find yourself in these environments, whether they're domestic or international, and you come across the time when you will have to make an ethical governance decision, you are on your own like Pat Bone. But what you're learning in these weeks are here to remind you of what you ought to do.
Yeah. I'll tell you. I'll tell you. I can sit up there in those meetings when previously I like, boy, I really sure, I ain't sure about that, but I ain't sure why I ain't sure about that. Now
Absolutely.
I
very
know.
sure.
Here's what this law say. Here's what this provision say here from the central bank. Here's what the SCB say. You got to do it right, y'all.
And you don't have to take anybody's word for it. You can speak
Exactly.
authoritatively, and that's
Exactly.
the beauty of being aware of what the hell's going on. Okay? All right. So, some serious stuff. So, the users are making sure or want to be sure, investors want to be sure that you have a sound company that's being run on proper governance before they put their money. Wouldn't you? If you get a bonus for $20,000 and somebody says to come invest in my company, aside from saying hell no from the first, are you serious? But if you decide to put some money into the company, you might say, maybe, but I need to see your financial information. I need to see them audited, and I don't want to hear what you have to say. Because some of you CEOs are,
Liars.
yes, they'll do anything to get you to invest in their company. Then they go and take your money and do some other nonsense. It's a very common occurrence. Now, not everybody is like this, but far too many persons are still behaving in an unethical manner.
Yeah.
That's why the issue of governance has become such an important issue, not only at this level, but from an international level.
Mhm.
All right? Serious business. Firms continue to get fined millions and millions of dollars for poor governance, and some of those bastards still won't quit. They keep still trying to get away with stuff.
Mhm.
Okay. Did I say that passionately enough?
Listen, when you have gone through the fire, you have all right to have passion, buddy.
Absolutely. But there's another reason why I put it that way. Because I'm not so worried about me. I said it that way so that you youngsters don't forget.
Yeah.
Otherwise, you might find yourself in a precarious position.
Mhm.
All right?
So
Then you'll find
I appreciate your passion because I'm like I went through that and I'm going through that and I blink and they ready to do some craziness. Hold on, you don't get there.
every day they're looking to do
Yes,
something
girl.
and they want you to blink or they
Yeah.
want you to get on board, one or the other or both.
Hold on. No, no, no.
Right? So hang in there. You haven't seen the last of it. All right? Who else is looking for these financial information other than investors?
Creditors.
Yeah, creditors, who are they?
Those are the people who would like lend you money, of course.
Yeah, they're banks who lend money. They are bondholders. They are anybody who lends you money, they are creditors. If you buy goods from a supplier on credit, they are creditors as well. They didn't give you money, but what did they give you?
Goods.
Yeah, their products. And they said, now I'm trusting you to pay me in 30 days.
Mhm.
Decrease, and you say, yeah, no problem. Just give me them shipment addresses. Christmas time, I can sell all them. Decreaser, 30 days, you promise to pay me back. Some people do, and some people don't. In any event, those persons are creditors. Who else is interested?
Tax authorities.
Of course, the VAT commissioner in the Bahamas. They are very interested in whether you're paying the correct amount of VAT. So that is why the VAT commissioner requires you to prepare and have proper records so that when they come around to check to see if you're paying the government the correct amount of VAT, they don't want any horse dead and cow fat. And if you can't support the amount you paid, but by showing the records that you use, the invoices, the posting, the transactions, the Excel spreadsheet, along with the documents to prove those transactions, then you're going to be in trouble if you're a company. Okay? So those are the persons, key persons who are interested in financial information. Very important people to the company, investors, creditors, and tax authorities. Of course, we know in the United States, Canada, and the UK, if you mess with tax issues, they'll lock you up, correct?
Yeah.
And I suspect one day in the Bahamas, when we get bold enough and we need money dead bad, we'll start locking people up too. But not yet, because we still have so much, something we call so much curry favor going on. Anybody ever heard of curry favor?
Yeah.
Ever wonder why we call it curry?
Why did they call it curry?
That's homework. Somebody Google it, find out why the hell we call it curry. It's interesting. Okay? Curry favor. That's interesting. I guess the old people used to say that curry is good for you. And I suppose, I guess, curry favor means doing something good for you because you're a boy or girl or something like that. All right. Uh, but one day when we get past that, we'll start taking the steps that we need to take to collect the money. So those persons who own real property tax, who have properties that are worth millions of dollars, instead of bothering you people for a couple of bucks, but you owe $5,000, you better pay or we'll. Then they'll go to the rich people and say, you people pay the millions first. Now that's real tax stuff. But we haven't gotten there yet. We just keep beating regular folk to death. All right. So those are the external people, those outside the company who are interested in this information. Anybody inside the company is interested?
Yeah.
Who are they?
Um, the board of directors,
The board of directors, definitely. Who else?
CEO,
And
and executive team.
and
Everyone, I guess, the employees.
employees, of course. We always say employees last, as if employees, like, well, okay, employees then. Like, like, like employees are chopped liver. Without employees, what would happen?
You have to do the work yourself.
Well, I know without employees, then the work can't get done
True.
at all because everybody's an employee at different levels, correct?
Sure.
And
Yes.
so we're all critical to making it work. That's the whole point. But sometimes when we refer to persons down the line, anyway, yeah, them too. Like, really? Wouldn't your life be miserable if you didn't have them too? Well, yeah, you say so,
That's true.
and so on. All right. So yeah, the board, senior management, managers, supervisors, and employees are all interested. Why do you think employees would be interested?
Because they want to make sure the company is not like the company has money to pay them, first of all.
Yeah, that company is going to be able to pay them into the not into the distant future.
Right.
Any other reason?
And that they will be an ongoing concern.
Absolutely. Absolutely. That the company is not going to be able to pay their salaries next week or month, but they're going to be in business for another 30 years when they retire.
Mm-hmm.
So they can retire with whatever amount of money they can retire with.
Yeah.
Okay. And then they just go off and fish or something.
Mhm.
Join a charity, run for office, whatever the case might be. All right. By the way, they tell me that today is International Women's Day. Is that true?
That's true.
Doggone it. So what do we do on International Women's Day?
We wish women happy Women's Day. International.
Okay.
At least I wish my team happy International Happy Women's Day.
Okay. So you just kind of congratulate each other on what you've done well and all the progress and so on. So which day is International Men's Day?
Every day.
Every other day.
Every other day? How is that?
Women have
Sorry?
years to,
Say
Cutting
it
in.
again. Say it again.
women have years to catch up. Y'all was always ahead of the game. Always,
Ahead of what?
y'all were here first. We have to catch up.
Here doing what?
Working, earning a living.
Voting, doing all these positions that women are just now coming to in this day and age.
Oh.
Getting
It's a pity,
paid more.
it's a pity you guys decided to take over the world so late because I'm gonna miss that fun time. Because from what I recall, if this had happened in my time, that means that all that money I spent I could have saved. That means that all that money I spent being Sir Lancelot, like looking after, that means my wife would have had to pay half of all that. And I'd have get to keep the other half.
Why should I have to pay off?
Because we're talking equality here. You
Yeah,
cannot
but
have
that
your
was
cake.
your choice. That was your choice to take care of us, so you can't say that.
I know, but if she tells me that she's my equal, then I tell her that's fine, no problem. I agree you're my equal. Equal in all things though.
Mhm.
You can be equal in some and not in others.
True.
Yeah, to be really fair about it, you can't really be equal in some things and not
So
other
are you
things.
saying that because, are you saying that, back in whatever time, you're saying with bills and whatever, so job-wise, a woman, you're trying to say a woman cannot think as logical as a man, so she shouldn't deserve to be in a certain position?
Oh no, not at all. I think if God didn't want women to think just as well as men, then she would not have had a brain at all. That's not really it. Women are capable of doing any kind of thinking as men. And therefore, I don't have a problem if she's doing the same work that she gets the same pay. All I'm saying is when everybody gets paid, everybody pay their share, whatever it is.
You just want to be petty on that part.
Oh, it's petty?
I didn't give up this conversation long time. For me, start talking about 50 here and 50 there.
Listen, I know you have. Remember now, I've been around far longer than you guys. I understand exactly why you gotta. I get it. I'm just telling you for future, when this whole thing changes, you cannot have your cake and eat it too. It doesn't work that way.
For years, men have had their cake and eat it too. We will have our cake and eat it too.
That's fine. But
But just give me enough.
while you're doing that, just remember that you have to take on the responsibilities that come with it. That's all.
That's
Nothing else.
fine.
Yeah.
Well,
So
once it's spent, you give me enough cake to do what I want to do with it then.
yeah, so here's what happens. When you get married one day, if you ever decide to bother to get married anymore, and these current times, but let's say somebody decides to get married and he earns $100,000 a year and she earns $100,000 a year, then whatever the expenses are, you just split 50-50 since everybody's on the same level and stuff like that. Because you
Okay,
can't
so
like,
this didn't come into effect, and let's just say she's making more money.
well, if she's making more money, then she should pay proportionately more of the expenses.
Even if we weren't on this equal rights business.
No, here's how it works. In order for it to be equal, if you make more, you have to pay proportionally pay more. If he makes more, he has to proportionately pay more. That's how you keep it equal.
Boy, this sounds convenient.
No,
Sound like I ain't gonna be equal.
yes, it would be. Remember, you can't have your cake and eat it too.
What am I supposed to do with my cake if I can't eat it? Why would I get the cake if I can't eat it?
Well, let me put it this way. If you have your own income, you cannot expect your husband to pay all the bills anymore. You have to share the bills with him and you have to share them fairly, not unfairly. Otherwise, you'd be practicing poor governance.
And
So fairly is according to our pay, or fairly is splitting the bills equally?
Splitting the bills according to your pay.
Oh, yeah?
Yes. Remember, he who has more is expected to give more in everything, including money and pay. I know.
let's look at the accounts. Let's go back to accounts.
Okay. Somebody has to be the devil's advocate. I just thought I'd be the devil's advocate for a moment. I get it. I understand your perspective. I know you want your cake and eat it too. You want both sides, but it's not going to work that way. In the long run, when this thing really kicks in, it's going to change the whole complexion. You have to be ready to deal with it. Okay? Just putting you on notice. So when the time comes, you won't be too shocked. All right? All right. But I have no problem whatsoever. I love this stuff. I watched it from I was a youngster with an afro. I saw the whole thing developing and coming to what it is. It's a beautiful thing as long as we remember to keep it in the proper perspective. That is going to be the challenging part for you youngsters going forward. Remember, I'm not going to be here. I'm going to be on cloud nine somewhere with a martini. Well, they're not martini in heaven, But you know what I mean. Relaxing somewhere
Mama did.
while you guys are down there fighting with this stuff. All right. So the external users, such as investors and creditors and tax authorities, they want to know that those accounting records are in order. The internal users also want to make sure that this information is in order. So everybody is interested in a set of accounts that are in order. That's really the governance side of this stuff, okay? Because so many people rely on this information and rely on it to be correct, okay? And those that we saw a minute ago, they are all serious users who have very serious expectations about making sure this thing works. Because if it doesn't work, the whole company collapses. And I'm sure you guys have seen cases like Enron and others where entire multi-billion-dollar companies have gone down because of poor governance. Multi-billion-dollar companies shut down and never to rise again because of poor governance. Somebody at the top doing nonsense. Sad. So many people lost their pensions. Some people, scores and scores of people committed suicide. They couldn't live with it. Their $150,000 pension that they worked 40 years for, down the drain, not to get a dime back, all because somebody was messing around with the accounting records and egged everything up. All right. Okay. Just expounding on my governance thing for you guys. Okay. So having said that, I think we understand to some extent now how important this whole process is. And when you put this together with what we discussed earlier in the semester with the ravings that go on in the boardroom and what is expected by the central bank and the OECD and everybody else, as far as governance is concerned, it's a very deep situation. Okay? That needs to be constantly be given some degree of attention uh, so that we can make sure that those of us who are responsible for the governance requirements that we do what we need to do. The consequences have been grave for those who did not follow through. Okay? So what is the accounting process then in summary? Well, it's a virtual series, a bunch of activities that begins with a transaction and ends with the closing of the books. And then in the new year, we begin transactions again. And at the end of the year, we close the books. And we keep doing that every year and as long as the company is in business. That is called the accounting cycle in accounting. And everything we do is bent towards making sure that that cycle is a successful one. Okay. Since it's reported every period, usually a year, um, we try to make sure that we do everything, we report everything within that year. The information for that year goes in that year, and nobody is busy trying to do anything that would bring harm and disrepute to the organization. Okay? And again, all of these things we looked at so far are all designed to augment or strengthen the governance process to make sure that nobody find themselves doing anything, whether it's at the board level or the accounting and finance level, to put the company in jeopardy. Okay. Did we ever talk about the accounting cycle before? Anyone?
I don't think so.
All right, just in case we didn't, let me just introduce you to the accounting cycle so that if you hear it again, you'll know, well, oh yeah, we know what that is. But really, it's just the routine that accountants and bookkeepers go through year after year after year for decades and centuries and whatever in order to make the financial information work and work well and work properly and work effectively and to maintain proper governance and decorum for the company. We all know that when the finances and accounting fail, more than likely the company is going to fail. So how does this cycle work? Well, first of all, and we've already seen the cycle in essence. This is just what we call a summary. So you can see the steps that basically occurs as we were talking about them earlier. First of all, we start with identifying, collecting, and analyzing, as you can see, all the documents we need from any particular transaction. Uh, what's an example of collecting documents for a transaction? Can you think of one?
You said
Um,
documents and
receipt-
transactions?
Yeah, a document for a transaction.
like receipts, collecting the receipts,
Yeah, a receipt or statements
statements.
or invoices or bill of sale or any such thing that represents proof that the transaction occurred. I'm sure I don't need to tell you guys that any transaction you get into, you need proof that it occurred.
Mhm.
Okay. In accounting, especially, you cannot record anything in a journal until you have the document or source document to prove it.
Right.
Don't let anybody tell you record it, they'll bring it tomorrow. They could tell you that, you just won't record it. Until when?
How they bring it.
Simple. That is not complicated. Okay? Stick to your guns. So we identify the transaction, collect and analyze whatever documents we need for that transaction. Once we have done that and decided what kind of transaction we have and what is to be debited and what is to be credited, as we saw earlier, then we can go to number two in the step two in the cycle, which is to record the transactions in the journal. You saw examples of that. It never changes. The only thing that changes are the transactions, and what you basically learn over time in accounting is how to classify them and analyze them properly. But essentially, the recording process in the journal is the same every single time. There's a date, description, narrative, debit, credit, and classification or account name. It's not difficult at all. Okay? And once we set it up in accounting, we hardly ever change the process. Can we ever change it? Sometimes, in some cases, but we have to justify it. Okay? What's the third step in the process?
Posting the journalized amounts to the accounts in the general and subsidiary ledgers.
Okay? So yeah, we take those journal entries that we did in two and we post them to those accounts that we saw in the general ledger. The posting process has to be very carefully done. If there are any errors in posting, they will show up later in the financial statements. Okay? And then once they're posted, what happens next?
Prepare the unadjusted trial balance.
Yeah, an unadjusted trial balance. We will see that in a little bit, what that looks like. And once that trial balance is done, we have a final step in the cycle, which is called the
Preparing the financial statements.
preparing the financial statements. All right. So that's our accounting cycle. It happens every year, every company. Any company that's not doing that, they are probably doing something wrong and they need to fix it because generally accepted accounting principles require that it's done in this order every single time. All right. So, having said that, we can come out of these slides and move our way to our final set of information that I believe will keep us busy for the next uh, hour or so that we have left or thereabouts, and then into next week. Um, I don't believe I need to add anything more to all of this. I think by the time we're done, you'll have more than you need to work with. Um, I encourage you, if you haven't started yet, to go ahead and start working through some of this stuff because I will be asking you to prepare little simple journal entries based on what we've discussed and financial statements based on what we're going to discuss. And of course, to be able to tell me what things like the accounting cycle are, the good stuff, the normal stuff. Okay. So just whatever you did in exam one, you do the same. Okay. Any questions before we get into this final part of our discussion on financial statements and governance? All right, wonderful. That's fine. As usual, jump in anytime. So, financial statements then. Financial statements are those things that accountants prepare at the end of the financial period. Sometimes it's done monthly. For some companies, they want to see what's going on regularly. Sometimes it's done quarterly. Sometimes it's done semi-annually, but generally accepted accounting principles require that it's done at least once per year. That can be a calendar year, which ends December 31st, or it can be a fiscal year, which ends in any month other than December 31st. All right. So if you hear the term fiscal year, you know that the financial year ends on a month other than December 31st. If you hear the term calendar year, you know that the financial year of the company is December 31st. Is there anybody in this room who knows what the fiscal or calendar or what the fiscal year is for your company?
Yes.
Okay. What is the fiscal year for your company?
Yes.
What is it?
December 31st.
Okay, that's the calendar year. Anybody has a fiscal year?
Mine is July 1st to June 30th.
Or the government year? Absolutely. Okay. July 1st to June 30th. Has anybody told you why they chose that period?
No.
I know they usually don't tell us, and unless you're in the smoking room. By the way, when you guys take over the boardroom, will you be smoking as well, ladies?
Mr. Wilkinson, let this die.
Man, hold on, I wasn't ready.
Somebody has to be the devil's advocate. I'm
Man,
just curious.
You're doing whatever you're allowed to do.
Oh yeah, that's funny. I'm just curious. I just wondering, like, that'd be a very interesting looking boardroom, a bunch of chicks smoking. I guess it's okay if once you have nongs and a mouth, anybody should be able to.
no.
Oh,
And drink.
and drink and get drunk too. Okay. Ah, sorry, I'm just being the devil's advocate. Okay. All right. So, what are these financial statements? What do they look like? How are they defined? Well, we are told that they are a formal set of records that are based on the financial activities and the financial position of a business or an entity. Well, we saw those financial activities. We were talking about them all the way to the accounting cycle. All right. And now you're going to see what we do with those numbers at the end of the year, when financial statements are prepared, and the results of operations. Usually, when we refer to the term results of operations, we mean the income statement. And usually, when we refer to the financial position of the company, we are referring to the balance sheet. Okay. So just keep that in mind in case I ask that. Like, what's another name for results of operations and financial position? You simply say income statement and balance sheet. Okay? If you have anybody having a conversation about that over a couple of martinis in the boardroom, now you know what they mean. They're not drunk, they're talking about that stuff. All right. So, what is an income statement then? Anyone?
It's the statement that tells the revenue. Sorry, it records the revenue and profit of the company.
Yes, it does. Does it record anything other than revenues and profits?
Expenses.
Expenses and
Um, Expenses and cost of doing business.
sort of, but that's further up. There's a word we call this last word, very important one.
Losses?
Yes. Who said losses?
Losses, that's true.
Yeah. But we are so profit oriented, we don't think about losses like, my God, losses. You've got to be kidding.
Yes.
But many companies suffer losses all the time. Okay. So the income statement presents the revenues from your sales, the expenses, which are the cost of doing business. So anytime you're making money, you have to spend money to make money. Ever heard that?
Yep.
The money you spend to make money is called expenses, in case you didn't know. Okay? And if your expenses are less than your revenues, you will make profits.
True.
But if your expenses are more than your revenues, you will make
Losses.
Absolutely. So that's the first financial statement you need to be fully aware of. You don't have to be an accountant. Once you understand those simple concepts that I just mentioned, you can pick up an income statement and without having knowledge of everything that's going on, find out whether your company is on the right track or not just by looking at those four elements. For example, if you go to work tomorrow and you pick up your company's financial statement and you see net losses 10 million, maybe you leave you in a panic because now you're, what the hell? I thought companies only made profits. I don't know why Mr. Wilkinson introduced me to losses last night. If he had not said that, I wouldn't even have looked at this flicking statement. Now I'd be able to, I can't sleep now. Okay? That's what information will do. So just keep those things in mind so that if you run into them again, you'll say, oh yeah, I know what the hell's going on. Doggone it. All right. So that's your income statement. Your balance sheet is the next statement, important statement. Okay. Now, what makes up the balance sheet?
So, sorry, Mr. Wilkinson, are we following something, or are you just
Oh, what made you ask?
because you seem like you're following something, but I don't see it.
I like that. Yeah, you're absolutely right. Now do you see it?
Let me see. Now we see it.
Okay.
Yeah.
So I was here gabbing and had you guys in the dark.
Well, I figured you wanted us to take notes, but I'm like, it sounds like we should have been looking at something.
Yeah, absolutely. All right. So we know what the income statement is now. Now we go to the balance sheet. What is the balance sheet?
It's
What is on the balance sheet?
it's a balance statement, a statement of financial position, reports on the company's assets and liabilities, and owner's equity at a given point.
Where did we see those three things before?
And the accounting equation.
Yes. So essentially, the balance sheet is made up of the three components of the accounting equation. And if you've already learned the equation, then you know what to look for in the balance sheet. Three things. When you pick up a balance sheet, you look for the assets, you look for the liabilities, and you look for the equity. And if you add up the liabilities and the equities on your company's balance sheet and they do not equal the total assets on the balance sheet, then something is wrong. And if they do equal, something can still be wrong because people sometimes fix the books to make it balance, which is why we have to bring auditors in to see who might be fixing stuff. Not all people fix stuff, but some do.
Who's doing the financial gymnastics? Say,
Aha. Okay. Financial gymnastics, cooking the books. Okay. And sometimes we can't tell who the culprits are until they get caught. Remember, everybody looks innocent until proven guilty. That's why when auditors come in, depending on what firm they go into, some people are very nervous because now they know that there's a potential that whatever they've been doing might be found. Sometimes the auditors don't find it and they breathe a sigh of relief, say, I don't know what kind of auditors they is. They ain't find it, they ain't find that 50,000 I embezzle. Because then auditors don't always find it. Because sometimes people have it disguised so well, you can't pick it up in the course of a normal audit. All right, so that's your balance sheet. All right, so when you pick up that balance sheet, you know what to look for, the three elements of the accounting equation. You can find them, you can find out what's going on your balance sheet. What is the third statement?
cash flow statement.
Yeah, the statement of cash flows. And essentially what happens in the statement of cash flows is that we measure all the cash coming into the company and all the cash going out of the company. Cash inflows coming in, cash outflows going out. Now, the reason why the cash flow statement is separate from the income statement, in case you haven't figured it out yet, you can make income without having any money.
That's true.
Anybody figured that out yet?
Because you can have receivables.
You can have all receivables, of course. Like many companies, most of their sales are in receivables. That's why they end up going under. because they give too much credit, build up the receivables account, and people don't pay on time. So then, for when the company has bills to pay, they don't have any money. So you could have $10 million in sales, but if you sell it on credit, you don't have any money. Does everybody see that?
Yeah.
Yeah. All right. So the cash flow statement is there to see what actual money is in the company that came in, and what actual money went out. Very important statement. A statement that people don't talk about too much for obvious reasons, because it gets into the nitty gritty of what really happened to the money in the company. Okay? The money. All right. Any other statements?
Retained earnings statements.
Yeah, the retained earnings statement. And the retained earnings statement is a very simple statement that records the retention of earnings. That's all it does. For example, if you make $10,000 in profits this year and you don't pay anything out in dividends, then how much have you retained?
100%.
Yeah, the whole 10,000. Next year you make another 50,000, you don't pay anything out in dividends. How much have you retained altogether in 2 years?
60,000.
Absolutely. That's all the retained earnings statement is. And it's designed to show what's you're keeping in the company to continue the business versus what you may pay out of the company and what's left. So if you have retained earnings of 60,000 and you pay 40,000 in dividends, how much is being retained after that?
Say that amount again. Say the numbers again.
If you have retained earnings of $60,000,
Yeah.
you pay out 40,000 in dividends, how much retained earnings do you have left?
20.
Yes, $20,000. Okay. And so one day, when you get as high as the board level, but you don't need to be as high as the board level to check these things and be aware of them and make them work for you and be able to advise your management and so on. You might come across some of this stuff in your normal course of business. All right. And the point is, you will no longer be unaware. And therefore, you'll be able to make some decisions on your own and for your company. You'll be surprised how this, as, as, as limited as this information is, restricted to governance as it is, it's a whole lot of stuff that can be very useful. All right, depending on what environment you are in. All right. So you remember earlier we talked about the trial balance?
Yeah.
So now we're into the trial balance. And we have a couple of expressions that we have for the trial balance because essentially what the trial balance does, it puts the numbers in the general ledger on trial such that at the end of any month or year, we run a trial balance. And we run a trial balance by taking all the debit balances in the general ledger and listing them, and all the credit balances in the general ledger and listing them. And if your accounting was done correctly, then the debits should equal the
Credits.
credits. Okay? And that's why we do trial balances. I don't know if any of you have ever been a part of an audit, external audit.
Yep.
Auditors come in. Yes, yes. So you've
Yeah.
heard the expression, we need to see the trial balance.
Yep.
Yep, every single time. Two things
Second.
auditors always call for first when they walk in. We need to see the trial balance and the bank reconciliations. We don't want any delays. We don't want any horse dead and cow fat. We don't want any excuses. We don't want anything. We want the trial balance and the bank recs for the financial year, period.
Yeah.
And there is a reason for that. And it's a very critical part of the audit process. It is a very critical part of the governance process. For I can tell you, much of the problems of governance occur somewhere between the trial balance and the bloody bank reconciliation in terms of what happened in the company accounts. Okay? Did we account successfully in the bank reconciliations for everything that ran through the company's accounts. Some companies still don't think they need bank recs, especially small business. I don't need bank. I know it's in my account. That without bank recs, they might know when not know when somebody take $200, right, folks? They disguise it and take 200 this week, 300 next week, 150 the following 2 weeks, and they do that for a whole year. So if somebody slowly takes $600 off your account in bits and pieces per month, how much do they take off in a year?
At least 70.
Uh-huh. And if you're not watching it, you may not miss it until it's too late. Many companies have lost money they still don't know. Part of the reason, no bank reconciliation, no control over cash. Nobody's watching and monitoring the bank reconciliation preparation to see what problems might exist to ensure that everything that went into the company for the year, for the month, is accounted for. That the bank didn't take anything by accident or on purpose. Hmm. My. Talk about governance issues. It's all wrapped up in all of this stuff. Okay? And if you're not doing those kinds of control issues, then you're not exercising proper governance over your company. And sometimes, if your control failures are so weak, so glaring, the result and the consequences of the company might be worse than any political decision you made at the board level that is not related to accounting and finance. Because major accounting problems can drown you as a company, have drowned many companies. The only problem is not enough white collar persons go to prison. How's that? Another devil's advocate thing. Okay, so why is it then that if somebody steals a loaf of bread, we arrest them, arraign them the next day, and lock them up for theft? But a lot of people in corporations are doing stuff all the time. We never lock them up. They keep getting away with stuff. How come?
They can pay them
Are they
expensive.
charged?
Expensive lawyers. Okay.
Some corporations don't want to see them arrested.
Yeah, some companies don't want to see them arrested because it would create what for them?
Reputation.
Yeah, what we call reputational issues.
Yeah.
Okay, it's just like when family members molesting a child and somebody covers it up in the family because they're trying to protect their reputation, even though they know that bastard is anyway, let me not go there. It's another issue.
No,
Okay,
let's talk about that. Let's talk about that.
that stinks. And a lot of times mothers know, aunties know,
The, mur-
siblings know.
the murder
Like,
count goes up when the mother knows. So
well, sometimes. But sometimes mothers condone it. They say that's the only man I got, and I don't want to lose him. So it's
I
okay if he
a
mess
couple
with my
stories.
daughter.
oh boy.
And I don't know how she figured that's the only man left with 3.5 billion men hanging around somewhere. But anyway, that's the excuse they give. So that's why I didn't call the police or whatever. But it stinks. Talk about governance issues. Little flicking. Anyway,
Yeah.
okay. Children, kiss
Yes.
my foot. Quite frankly, as a man, I don't see how they could even perform looking a child in the bloody. Anyway, where was I? Trial balance. Okay. Anybody for castration? Or is it only me? Thank God. Okay. I'm for castration.
Let's do it.
It's not necessary. What nonsense is that? All these chicks walking around, chicks on here, chicks, there, chicks around the world, chicks. They have prostitution free in some countries. Fly there. The hell? Okay. Where was I? Trial balance. So the trial balance then looks at taking all the debits in the ledger and all the credits in the ledger, adding them up, and they should balance. If they don't balance, then they tell the auditor or anybody else that there's something wrong in the accounts and somebody has to go back and find the problem. Okay. So that covers point number one. All ledgers are compiled into debit and credits. The second thing is, of course, those debits and credits constitute the trial balance. Trial balances should be done periodically. Anybody knows why? As a control measure. Okay, if you do it once a year, that's okay. But if you do it once a month, if there's a problem, you might find it sooner, correct? At the end of the year, it might be so well hidden you can't find it if there's a problem.
Sure.
Okay, so sometimes it's important, just for the record, you tell your staff, please, I need a trial balance every month. They say, what do you need it for? None of you, I need it every month. And they wonder what he's looking for, or she, wonder what she's looking for. She wants a trial balance every month. Okay, well, we know what we're looking for. We're looking to see if there are any problems, and if there are any problems, you try to catch them sooner. The sooner you see it, the sooner you can deal with it. Okay? So that's your trial balance. And again, the trial balance is designed to ensure that the entries in the company's books are recorded and posted correctly. That's all. No big secret, no magic. That's the only reason why we have a trial balance. But believe it or not every company's trial balance or general ledger balances.
That's true.
Believe it or not. And then you have to go back and fight to find out what really happened. Sometimes companies never find out the reason why they are out $375,000 somewhere.
That's
Sometimes they find it, sometimes they don't. Because sometimes the error occurs in a place where nobody picks it up. Or if somebody's up to no good, they set the record in such a place you can't find it. You'd be surprised how common it is. Okay? By all means. All right. So here then lies a sample of a trial balance.
I had to prepare one of those. That was, whew,
A trial balance?
it was an experience, yeah.
Yeah, a trial balance could be a pain in the butt depending on what you have to do and what the result is.
Mm,
All right. Because sometimes when these things don't balance, you have to try and go back to find out what happened. It could be a nightmare. Because it means now you have to go back to all the journal entries for whatever period you're looking at and trace all of them back coming forward to make sure that all of them are posted correctly. And
So your trial balance should be in chronological order as well.
when you say chronological, what do you mean?
there's no date normally,
On the trial balance?
right? No date on the trial balance, right?
The only date on the trial balance is in the heading
Yeah.
to say that it's a trial balance as at the 31st of December.
So you don't
Or,
write it in as it happens then.
say it again?
You don't write it in date order then, like
No,
the
you
depth.
don't. No, that's a good question. Excellent question. No, unlike the journal entry, you don't write it in date order. Here's what happens. Well, first of all, hold that thought. But that's a great question. No, you don't write in date order. Here's what we do. First of all, when the time comes to prepare trial balance, let's say the end of the month, because we want to know what's going on a regular basis. The first thing we do when we're preparing a trial balance is to put the name of the company at the top. Do you see that?
Mm-hmm.
Followed by?
The name of the trial balance.
Yeah, the name of the account, in this case, the trial balance, and then that is followed by the date of the trial balance, which is usually the end of the month or year or quarter. Okay? Now, we do that because anybody picking up the paper will see what it is. That's very important. Now, notice this trial balance has three major categories. We have a description category on the left, we have a debit column, we have a credit column. Now, the first item in this trial balance is a what?
Yeah.
What is it?
Yeah.
Yeah, cash.
Cash down.
Now, which statement is the cash come from?
The cash flow statement.
Aha, that's a good point, but not really. At some point, the cash will balance to the cash flow statement. But for the purposes of the trial balance, we don't take the cash balance from the cash flow statement. What's other statement you think we take the cash balance from?
The journal?
Reconciliation.
Getting warm. Which of the four statements that we talked about do you get it from? You think?
The income?
Not the
The
income.
balance
The
sheet. Balance
Yeah.
sheet.
Remember I told you the balance sheet carries the three elements of accounting. What are those from the accounting equation?
Assets.
That's liabilities and owner's equity.
Correct. And cash out of those three categories is an?
Asset.
That
There you go. So that cash balance came from the balance sheet. Whatever the balance in the cash account was in the general ledger, that's where that came from. Is that 4,200 the same cash balance that we looked at when we looked at our general ledger?
That was 4.7, I think.
What was the cash balance in our general ledger?
4,007.
477?
4,700.
1,007.
Oh, that one. Okay. So it's not that. What about the other cash balance we saw in the general ledger? The 47,000 was really not the cash balance, was it?
Oh,
Remember how we calculated the balance? What did we do?
You minus we do what we started off with.
We started off at 47.5, 47.7, and what did we do?
Sure.
What did we subtract?
The monies we paid up.
Yeah, all the cash that we paid out. So when we subtract 4,700 from that, what was the balance in cash?
32,800. 32,800.
Exactly. So that is the cash balance. But this balance we're looking at is 4,200, so it's not that. What about the other cash balance we saw in the general ledger? How much was that? I'm sorry, I'm just having you scrounge around like accountants do, so you can get a feel for scrounging around.
401,570.
Absolutely. So we know that this balance and this trial balance is not that either. So this 4,200 came from another balance sheet somewhere. That's the point I want you to see. Okay?
Oh, okay.
All right, and it's the debit balance. What's the next debit balance we have?
Prepaid insurance.
Yeah.
Yeah.
Which of the statements did that come from?
That would come
Balance
from
sheet.
The balance sheet.
Oh.
What about shop supplies? How much is that? Debit for how much?
$990.
Which statement do you think that came from?
The balance sheet.
Of course, because so far, all of these things we talked about are assets, aren't they?
Correct.
And assets represent what the company owns, and they are on the balance sheet. Okay? Like this accounting thing all ties in at the end of the day. That's the beauty of it. Any other asset?
Building.
The shop equipment.
Shop equipment.
Shop equipment, how much is that?
3,860.
Yeah, 3,860. Remember, we know from the rule that we learned earlier that debits do what to assets?
increase.
Increase assets. Yes, yes, yes. All right. Now, this shop equipment also has an expense attached to it called depreciation. But in accounting,
Accumulated.
yeah, accumulated depreciation for the shop equipment. Because remember, the equipment is not going to last forever. So in accounting, we depreciate it each year. So in this example, how much is the depreciation for this year or this month?
770.
117. Notice, is it a debit or a credit?
Credit.
It's a credit because it reduces the overall cost of the asset, which is 3,860.
So how do you know how much how much depreciation to add to it?
Wow, that's a good question. And you figure out how much depreciation based on the depreciation method that we choose to use for accounting purposes. For example, in accounting, there are these 4 different depreciation methods that accountants are allowed to use to calculate depreciation. The simplest method is called the straight line method of depreciation, where, for example, if let's say we bought a car for $12,000 and we say that the estimated useful life of the car is going to be 5 years, what would be the depreciation each year?
Repeat that. How much for the car?
$12,000
Mhm.
and the estimated useful life of the car will be 12 years. What would be the depreciation each year?
1,000.
$1,000.
$1,000.
12,000 divided by 5 years is $1,000.
You said 12 years.
12 years.
I said 12 years.
Yeah.
I'm
Yeah.
sorry if I said 12, you're right, but I didn't want to say 12. I wanted to say 5 years. What would depreciation be if it was 5 years? If the estimated life is 5 years.
2,400.
2,400. And so that's how we do it for straight line depreciation. Every company will choose their own method. So this company looks like it used the straight line method. We don't know and we don't want to guess. But that's just an example of how they may have arrived at the 770. You
Okay.
follow?
Mhm.
Now, going into next year, when the financial year ends, let's say it ends December 31st, what do you think the book value will be for this equipment in the new year, come January?
Value.
Sorry?
That would be the book value for, sorry, for what?
For this equipment in the new year.
Then it'll drop another year.
Yeah, so how do we make it drop? We take the 3,860, which you paid, and you subtract the depreciation, the credit. If you do that, what would you have left?
Hold on, sorry, what do you do?
You take the cost of the equipment, which is how much?
3,680.
And subtract the depreciation for the month or year, which is 770. What do you have left?
2,910.
Which is the value of that equipment for next year. You follow?
So the shop equipment next year would not be 3,860, it would be 2,910.
Yes. And
Okay.
every year will go down by 770 until it's 0.
Okay.
Just like your car that you buy. You pay $50,000 for your car. It depreciates in 7 years, 5 to 7 years. So at the end of 5 years, your car is fully depreciated, which means it has lost most of its value, correct?
Yeah.
Now you may still have it for another 15 years, but for accounting purposes, it has lost most of its real value. And that's the same with any other asset that is depreciated, okay? But somebody was bold enough to ask the big question, like, how the hell did we get the 770? And then cause us to get into the different accounting methods. But that's just kind of an introduction of how we got the 770 and how it works. For your purposes, it is enough that you know what the cost of the asset is, which is 3,860, and that the depreciation is 770. Okay, and the fact that come next year, the value of that asset will be reduced by whatever the depreciation amount is, just like with your car. Okay? Does property depreciate?
No,
No. Property goes up in value generally,
it
not
appreciates.
down. It appreciates, yes. Yes. Any other assets?
Say land
Anything before land?
or building.
Building.
What's the cost of the building?
57.
Oh my God.
Is the building depreciating?
Yes.
Uh,
Yeah. What is the depreciation for the building this time, this period?
3840.
Which means that the value of the building next year will be what?
50, 53, 53, 7, 53,
So,
660.
Yes. Okay. All right. So you see how that works already. With a little bit of information, you're already way ahead. You don't have all the information because it's a whole class or two to teach the different depreciation methods, but you do understand the concept. And that's the important thing when you're looking at this information at this stage. Okay. Any other assets?
mm,
No other assets?
And now, the land.
The land. How much is the land?
55,000.
All right. What's the depreciation on land?
Land doesn't depreciate.
Wonderful. That's what I'm talking about. She said it pretty authoritatively too. Don't try that. Land does not appreciate. And you're absolutely right. So, have we recorded all of our debits?
No.
No.
What other debits we have in this trial balance?
Yeah.
Wages.
expenses,
Expenses.
Yes, all the expenses are recorded as debits. Remember that?
Mhm.
What do debits do to expenses?
Increase.
This might put you guys have that down back already. That's good. All right. So between the assets and the expenses, we have all of our debits, don't we?
Yeah.
Yes.
Yes.
Where did these balances come from? Your general ledger accounts. Remember that general ledger set of general ledger accounts I showed you? It's not that group, but it's a group just like that. All we do is go to each account and take out the balance and put it in the trial balance. So all the assets and all the expenses are listed as debits. Now we can go to the credit side. And now that somebody raised a brilliant question about depreciation, we know that depreciation, accumulated depreciation is always recorded as a what?
credit,
Credit. So now we have two instant credits as a result of that. We have the accumulated depreciation for the shop equipment and the accumulated depreciation for the building. Do you have any other credits?
Yes.
What are they?
Unearned rent.
Unearned rent,
Your loan payments.
notes payable,
Common stock.
common stock, which is the investment into the company,
Return earnings.
retained earnings, which is the money you're keeping in the company,
And rent earned.
rent income or rent earned, which you collected for rental services. Anything else?
Fees earned.
Fees earned. Okay, those are all of your credits. So, having done that and thinking you've recorded all the debits and all the credits correctly, you can go ahead and be bold enough and total them up.
Total.
Does this trial balance?
yeah,
Yes, it
Yeah.
does.
Fortunately, this one balances. Does that mean that everything inside is correct?
Not
Not
necessarily.
necessarily.
We hope so, but not necessarily. Remember, we could make anything balance, can we not?
Yes.
Making it balance doesn't mean it's correct. Because you quack doesn't mean you're duck. You may be faking it. A lot of people, a lot of people's accounts trial balance is balanced. When you go back and check the individual accounts, you find they have all kind of issues, errors, and fraud.
All right, I gotta run. I'm sorry, I gotta run right now. I have another appointment.
It's 8:30, Paulette. You can't leave the house.
I know, but my appointment is here actually.
Oh, well, in that case, all right. Fortunately, you won't be missing too much. I'm going to let your colleagues go in a few minutes. You guys have been fantastic. So I'm just going to say one or two things and then we'll be done. So
Okay.
All right, so if you have to run off, that's fine. We'll see you next week.
Okay.
All right, take care and get back in one piece.
All right. Thank you. Good night, everyone. Great
Good night.
class.
Good night.
You guys are so brilliant.
So,
Good night.
good night. Good night. Any question then, folks, on the trial balance?
No, I don't have any.
All right. So let's see what follows. You know what? I'm not going to start the balance sheet tonight, except to say one thing, and then I'll let you guys off a little bit earlier tonight. You've been just fantastic. Okay. I just want to say one thing about this balance sheet before you get into reviewing this stuff, if you haven't done so already. There's something sitting on this balance sheet that should jump out to every student in my class tonight. What is it?
Equation, the accounting equation.
The accounting equation. The three elements are sitting big, bold, and biggity, as we say. What are those three elements?
Assets, liabilities.
Assets equals liability and owner's equity.
Absolutely. If we take the total liabilities of this company and add it to the total equity, what do we get?
$8,374.
Does it balance off with the assets in this company?
It does.
Okay, which means that this balance sheet as of December 31, 2016
Balances.
yes, is in balance, and that's a good sign. Hopefully all the other information in those bloody individual accounts that's sitting pretty and smiling are also correct. All right, so we're going to stop there. If you haven't looked at these slides yet, please take a few moments and look at them. Don't worry if you don't understand everything you see. It's perfectly okay. We're going to have the discussion next week when we get together again. And you're free to get any questions, or you'll be able to see things a little clearer at that time. Any questions?
All right, Mr. Wilkinson, Charles here. I just wanted the record to reflect that I'm in attendance.
Okay, Charles, let me see. Let me make sure I have you listed on my Charles. 1, 2, 3. Okay, wonderful, Charles. Thank you very much. I have you here. Any other questions? Anyone? Okay, great. You guys take care. I'll see you again next week, Monday. Please get back in one piece. If you have a question, you cannot wait until next class and you want to raise it, all you need to do is send me an email. I'll be sending your grades out in a little bit, and I'll see you next week. Okay?
Okay, good night.
Good night,
Take care.
All right.
Good night.
All right.
Good night.
Good night.